What's up, everybody? It's CryptoPher at Steemit, Crystal Bear at Facebook, and g.mail.baby, actually g_mail_baby at Twitter, coming to you again as a follow-up video. A lot of people don't seem to understand what cryptocurrencies are, so I kind of just want to do a quick video to explain what a cryptocurrency is. Most of us are used to using fiat currencies. Fiat currencies are like dollar bills, euros, pesos, rubles, pound sterling, things like that. It's the currency of a government, or more specifically these days, the currency of a central bank, because the central banks have now been given authority by governments to create fiat currency whenever they want to do it, and then they charge it to the government for doing so. So the government pays interest on any fiat currency that is created. That's a side note. But anyway, whenever you buy something, you're used to using, let's say in the United States, we use dollars. So you pull out a piece of paper and you give it in exchange for something else. Well, cryptocurrencies are a similar concept. However, they are digital, which means you're not dealing with a physical product unless you decide to print one out, whether by 3D printing or, manufacturing. So like when you hear about Bitcoin, they always show that coin thing, and really, reality, it's not really a coin. It's ones and zeros. It's programming. It's just a mark on a ledger that when we do a transaction, I gave you certain number of coins in exchange for a certain product. Well, at least that's the concept of it. And more, there are businesses that are accepting cryptocurrency as payment for goods and services. Amazon Prime is one example of a mainstream business that accepts Bitcoin in payment for goods and services. So, well, actually goods, because I don't know that Amazon Prime is doing services yet. It's possible they are, but I'm using those aspects of it, so I don't know. But so a cryptocurrency is very similar to a fiat currency or a foreign currency exchange. And so what happens when you go to another country, like let's say you leave the United States. United States use the US dollar, but then you're going to travel to, let's say, China. So when you get to the airport, you have a foreign currency exchange. It's a place that gives you the rates of exchange for dollars to yuan or RMB, because you can't use dollars to buy things in China, so you've got to exchange it. And so there's a rate of exchange that you use. So that's what a cryptocurrency exchange does as well. It allows you to purchase, let's say you have Bitcoin, you exchange Bitcoin or dollars for Bitcoin, and now you're in the Bitcoin realm. But let's say you want to buy an altcoin. I'll just pick one out of thin air. Let's say Verge. You want to buy Verge with Bitcoin. Then there are exchange rates for how many Verge you can purchase with Bitcoin. So it's no different than a foreign currency exchange, but now you're using a cryptocurrency or a digital currency, which is not physical. Now, cryptocurrencies are also a little bit more complex in that they also have programming. Some of them they're almost like hybrid technology stocks, and mixed with foreign currency and precious metal mining stocks. That's the best way I can think of it. So because they like to use this term mining, where mining is basically creating new currency by doing the transactions or processing the transactions using your computer. So if you have a fast gaming computer and you want to use it for cryptocurrency mining, you can dedicate it to doing the transactions on the blockchain of that particular cryptocurrency. So when someone does a transaction, like they give you a certain amount of Bitcoin for another amount of Bitcoin or something like that, that transaction is processed on a miner's computer. So in a lot of ways, they use that thinking where it's very similar to like a precious metal mining company, where they do the company itself goes out and explores. They do the process. They pull out the gold from the ground. Let's say, just take a gold company, for example. They mine the gold from the ground, they process it, and then they bring it to market. So you have different types of gold companies, you have like the mainstream companies that have what are known as proven reserves. They've found gold ore in the ground, and it's known and it's been tested, and they know the amount that's there. Then they also have probable reserves, which are reserves they might have from other lands that they've done exploration. And this is a main gold company that would have it. Now, there are also junior gold companies that are lesser known. So the main gold company would be like Bitcoin. It's established, it's known, it's the main company in that industry. And now when you're looking at a junior or an altcoin, those are the similar analogy to that industry. So like a junior company might, they own land, but they haven't really explored it yet. There's a possibility that there's a reserve there, so they have probable reserves. So the junior gold mining company tends to have higher risk than a big gold mining company, because a big gold mining company has a lot of money and capital behind it to be able to produce that resource and bring it to the marketplace. Whereas this one has just the discovery, and they may not have the funds to develop the ore, to extract it from the ground, to process it, and then bring it to market. So a lot of times the juniors will get bought out. They'll get absorbed by these bigger ones. In a lot of ways, that's similar to a cryptocurrency, where you have the Bitcoin, Ethereum, Litecoin, and I'm going based on Coinbase, the Coinbase exchange, because they only sell those 4 coins of Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. Those are like your big gold companies, and they are the ones that are established. And in a lot of ways, when you go to other exchanges where they list all the other junior type coins, the altcoins, you need to use the main coin, Bitcoin, in order to do transactions. Unless the other coin companies are paying their associated dues to be on that exchange. So the other exchanges might list all these other coins to do transactions in, but they may not have been paying their dues. So you may not be able to use Litecoin, for example, to trade in other altcoins. You may only be able to use Bitcoin. So Bitcoin is the main one. And so the way Bitcoin goes, so goes the industry. So like the big gold companies, when they start to go down, a lot of times the junior companies will go down. They'll go down in a leveraged fashion. Or if the major gold company goes up in price in the stock exchange, the junior will go up in a leveraged fashion. So we see that similar thing with Bitcoin. So Bitcoin is the main driver of the markets, because Bitcoin is used to purchase the other currencies. So if you're going and speculating in the price appreciation of an altcoin, which is not proved, has probable potential to be something cool, but no one really knows, because there's no way to really value these technologies and these currencies yet, except for Bitcoin. So when Bitcoin rallies, you most likely will get these altcoins rallying in a leveraged fashion. Because a lot of people are looking to strike it rich, because a lot of them have missed out on the Bitcoin. I mean, I'm one of them. I saw Bitcoin at like 38 cents. I said in my other video, when I was a commodities specialist, it was crashing and people were crying that Bitcoin is done. And I believed it at the time, because I didn't understand what I was looking at the time. Now I do, and it rallied too fast for me to get involved. But now it's come back down, and I believe it's a good time for me to get involved. That's me. If you want to do it, that's on you. But I do my research on things, so to me, everything is a Ponzi scheme. Everything. Just understand that. You have to be the first to get in order to make money. And the stock market, to me, is already overvalued. The last people in are going to be left holding the bag. The smart people got out already and took their profits. The bond market, same thing. It's a Ponzi scheme. The smart people got out, and the government is propping it up so that the stupid people will keep coming in and stay in it, so that, they'll keep funding the government. And commodities kind of have come down. I don't think commodities are as inflated as the rest of the other markets, but pretty much everything has been bought up. So when you're looking at this kind of environment in the economy, it's a high-risk environment. And I believe the dollar is going to lose a lot of value, so that's why a lot of people are just buying things with risk their risk tolerance is super high at this point because they don't care anymore. They know the dollar is losing value. They just want to get out of the dollar. So they're just buying up everything. So with that in mind, look at the cryptocurrencies. Cryptocurrencies are a relatively new market. They're not saturated or overfilled like these other markets, like the stock market and the bond market. This is one of the few places where not as many people have gone into because not as many people understand it. It's a little bit more complex. It takes a little bit more work to go into it, but once you grasp it, it's very easy to navigate. And you're going into a relatively new market because I believe at some point the dollar is going to start losing value, and those people who are still holding dollars and trying to buy things are going to see prices going up in dollar terms, and they're going to be like, what's going on? They're going to realize, God, I should have been in those cryptocurrencies, and they're all going to try to flood in at some point. I posted a report that some people are using credit cards to purchase cryptocurrencies. And that to me is very similar to what was going on in the real estate market. People were using loans to buy houses and they didn't have the money to buy those houses. So is it possible the cryptocurrency market could become overinflated at some point and crash? Yes, I believe that is possible. And I also believe that the economy is not very sound at this point. So anything could lead to that, and that could lead to all markets crashing because the other markets are already saturated. Stock market is already saturated. Bond market is already saturated. Real estate market is saturated. All these different markets where people can put money are so full of people. They're so saturated, so wet with investors that I believe at some point that's all going to come tumbling down. Now, I personally have a certain amount of cash that I always keep on reserve for opportunities like that where I can buy things, because when things crash, even though the value of the dollar is going down, I don't think it's going to go down as fast as that crash at some point. Those markets will take that elevator down, and they will take it down fast, and I may be able to hop out of some of those dollars into those new assets. However, I also diversify because I don't know. I've also studied monetary history, and I know that fiat exchange currency or foreign exchange currencies can go to zero overnight. I knew people personally who lived in Mexico. They were millionaires. Their family were millionaires, and there was a Mexican peso crisis, and they said their family was wiped out financially overnight. The next morning they woke up when the crisis occurred, and it usually occurs at a time when you can't do very much about it. They woke up in the morning and their pesos were worthless, so they lost all their wealth. Of course, they're intelligent people, and they were able to make a lot of that wealth back. But governments, this is why we're going towards decentralization around the world. Governments have abused their power position and have robbed the people that they're supposed to be representing worldwide. Doesn't matter what country you're talking about, they're doing it worldwide, and we're just seeing it in the most communist nations, like they claim to be socialist, but Venezuela, Zimbabwe, countries like that, where the government decided to print the currency for whatever purpose they wanted, and the people suffered because the value of the currency just went in the toilet. So this is why I believe worldwide people are going into these cryptocurrencies, because there's no way government at this point can track them yet. Is it possible to do it in the future? Yes, it would be possible in the future. So the way I see at this point, though, if we develop this technology faster than the government can get involved in it, and if people can get the courage to be brave and go into it, this is a way for us to be free from government. However, with a caveat, I am also a Christian, and the Bible talks about a day when, in Revelations, when the world will be on a mark of the beast type economy and finance system, where if you piss off the government, they can shut off your number, and then you can't do any transactions. That's the risk you have with digital currencies, which cryptocurrencies are. So we have a chance for freedom, but we also have a chance to be enslaved. And that's if we don't understand the technology and we allow the government to get their hands on it before the rest of the people do, and we don't educate each other and utilize this stuff and keep developing ways that the government can't keep up with to have transactions that free us from taxation, that free us from tracking, and free us from government control, then the government will get in. because they have unlimited resources. They can tax all of us. And this is where the Democrats, the socialists, the communists are bringing in their own slavery, and they're trying to convince you that it's noble for the government to take care of everyone. Because when the government takes care of you, they will take care of you for good. So they have no competition. You will not be sovereign. You will not be free. They will control everything, and you will depend on the government. And if you piss off the government, they will punish you by cutting you off from the system. And you'd have to come in begging and willing to give up whatever freedom you have left in order for them to possibly put you back on the system. So this is the future that we are looking at. And I just want you all to think about that. So cryptocurrencies are the way of the future, in my opinion. But you have to be involved. Now, what we see right now is Bitcoin, like I said, is driving everything. And at some point, we're going to see other currencies take the position of Bitcoin, where they are the ones that are used to purchase other currencies. So that's called atomic swapping in the crypto world. You can atomically swap a Bitcoin for a Litecoin, let's say, without going to a US dollar first and then buying the Litecoin. You could go directly from crypto to crypto, instead of going crypto to fiat currency to crypto again. So we're going to see these days of atomic swapping coming in, and other coins will take the lead. And then I don't know how much Bitcoin will be involved anymore. We may see a new replacement, and we may see a shift of the whole thing. Now, like I said, let me do one more thing before I go. I mentioned that cryptocurrencies are also like technology stocks, because they have white papers. They talk about what their process is going to be for that each coin will run on, and how they do transactions and how fast they can do transactions. And they do things like stocks, where they split. In the stock world, if you have a stock that is doing so well, everybody's investing in it, the company could opt to split the stock. So if you own the stock at $100 and it splits, you now own, instead of one share of $100, you have two shares at $50 a piece. You have that similar concept with cryptocurrencies. So like but they don't call it a split, they call it a fork, a hard fork. Hard forks come along for different reasons, but basically it's a single blockchain that then is split into two blockchains that are almost identical. But from this point on, whatever you build off of those independent blockchains, they are no longer identical once you build off of them. And so there may be a reason why they split it. At first, maybe Bitcoin, just for example, had a blockchain that led to something that was a problem, and certain people didn't like it. So other programmers can go back into the blockchain before they go back in the chain to see where that problem started, and they can go to the block just before it, and they can split, so that you have this chain, and now they can build a completely new chain off of it and do a completely different coin. That's where you get things like Bitcoin Cash. You know, it has the same name, but it's a split. It's a different coin. It starts with the same foundation. So if you own Bitcoin before that split, you would own both of those. So you would have a diversification of cryptocurrencies. So this is why I'm urging people to get involved in the cryptocurrency world, because then you can automatically diversify, benefit from the splitting, the hard forking that occurs. And what at this point, because it's a new technology, I would do what's called we call it hodling in cryptocurrency. It's basically a misspelling of holding. You buy and you hold. You find good cryptos and you hold them. If you're the type that holds, wait for a market to crash big time, like it just did recently, last month in January, February, December, January. You had a pretty hard crash from Bitcoin being at like $19,000 a Bitcoin down to like $10,000 a Bitcoin. And it's currently somewhere around 13, 14, maybe even 15. I haven't looked at the market today. Thousand a Bitcoin. So you get in early. You don't have to buy a full Bitcoin to be into the market, at least so you get some exposure. Diversify. This is not a recommendation. I'm not a financial advisor anymore, but it's just what I do. I get in early, I get exposure to the market, and if anything splits or anything rallies, I come back, I check it later, I go, oh, hey, that's high, let's get out of it. Go somewhere else, diversify that way. It's a new market, but again, like I said, all markets get corrupted by credit, and we are in a huge credit cycle right now because the economy is not doing well. So people are borrowing money to finance their projects, and a lot of people want to get into cryptocurrencies and they can't afford to on their own dime, so they're using credit cards to do that, which could be smart because you could probably rob the banks doing that, but it'll affect your credit if you ever need a loan in the future. That's kind of like what they did in 2008 with the real estate market, 2007. People didn't want to miss out. They had FOMO, fear of missing out on the real estate market that was bubbling up. It kept going up and up and up and up and up and up and up, and everyone was like, I'm going to miss out on this. So they would take loans, and the banks provided these loans to allow people to buy homes they couldn't afford personally. And then when it came time for the market to crash, they couldn't pay those loans back, so a lot of people just walked away. At least with cryptocurrency, if you walk away from your credit card bill, you may still you may have it ding your credit, but you still have the cryptocurrency. Unlike with the home gets repossessed by the bank at some point, or you have to short sell it to kind of recover any of your funds. With cryptocurrency, you have the cryptocurrency. So I'm not advising people to do that, but it could be a way that people are figuring they're going to have exposure to the crypto markets. Anyway, so because of that, I can see cryptos crashing. So just be careful of that. I might have more stuff later on. If you guys want it, just let me know. Thank you for supporting me. Check me out. My son's in the backyard. He just woke up with my loud talking, but check me out at CRYPTOPHER at steemit.com, and make sure you upvote my material, and I will get more out to you. It's okay, baby. I'll get back to you in a sec. And you can support me on Facebook. I'm at CRYPTOBEAR, CHRISTOBEAR, like bear. Kalaycay, CALAYCAY at Facebook.com, or The Magnificent at Facebook.com. All right, I'll check you guys later. Thank you for supporting me on all the platforms, and hopefully y'all make money, and hopefully you guys avoid what I believe is a catastrophe to come. Oh, shoot, my daughter woke up too. She had some FOMO, fear of missing out on the crying. All right, we're going to go eat. Mommy's already in the restaurant. I just took some time to do a quick video because everybody was sleeping, but they're now awake. And I wish you guys luck in trading and in the world. Take care.